Welcome to the podcast. Today we have Natalie joining us, and she is with Fifth Third Bank, a division called Provide. Natalie, welcome. Thanks for joining us.
Thank you for having me. Happy to be here.
Cool. So today we are going to talk about SBA and some questions that we've received from our clients around the SBA loan process. And you have a background in lending and SBA lending, correct?
I do. Yes, I've been doing SBA lending for about 13 plus years.
Awesome, awesome. When so before we started joining, talked a little bit about the different the agencies that we small businesses that we work with. Talk to me about when clients, when businesses should start to be thinking about an SBA loan and when it's right for them.
Sure. Well, I'd say the first thing is anytime you're trying to accomplish something new or different in the business or level up, um, thinking about an SBA loan is a good idea. It may not be the right answer, but it's good to start. Anytime you start thinking about growth, think about SBA. SBA loans started out being for very narrow purposes. And these days, SBA loans can be used for any business purpose. And so this means when you're thinking about growing or when you're thinking about trying to do something within your business, the first thing you can do to get ready for an SBA loan is think about what is the big picture I'm trying to accomplish. And that step alone will help you communicate better with your bank about what kind of loan you need, honing in on how you would use the money. I mean, some people think or may think you can just get a loan for X amount, you qualify for an amount, you get the money, and then the bank goes away and you go on and decide how to spend the money. And that's not how it works. Banks have to know how you'll spend the money. So knowing what your big picture is, knowing how you'd like to spend the money, and um, knowing a timeline. You should allow several months, 6 months even, to sort of find the right bank, get approved, and then get the money.
What types of documents are they looking for? Are the banks and even the SBA looking for when you're trying to prove out that plan of where that money is going?
Well, the first thing you're going to need to have is good, clean financial information for your last three tax return years and the current year to date P&L and balance sheet. This is the primary thing that SBA lenders look for. Can your business afford to repay the money you're asking for based on its historical performance? And so having those documents available and knowing what's in them so you can answer questions, that's the first most important step, and being really clear about the outstanding debts of the company and what the repayment terms are. That's what's necessary on the company side. And then what some people may not realize is that with SBA lending, your personal finances are also factored in. So anyone who owns 20% or more of the business needs to be prepared to provide a personal financial statement as well as 3 years of personal tax returns.
Got it. Do they want to see like the plan for, okay, where we're going to be putting this money, like what we're spending this money on?
Yeah, it depends. So generally, yes. If the SBA needs to know how you'll spend it. And so it creates, SBA has specific buckets. So you either want money for working capital, and that is a very broad term for SBA. That isn't just for operating capital. That could be for an advertising campaign or to hire people to implement some kind of campaign. Um, but the other buckets are more straightforward: to buy commercial real estate or to renovate or to buy a piece of equipment, that kind of thing. And so SBA is looking to know which bucket, how much money from which bucket, and if ideally your company can already show that that amount is affordable, that the loan payment on the amount you're requesting is something you can already afford based on how much you've made historically and your existing debts. If the money you're asking for is to expand or level up the company and it's going to improve your cash flow, then absolutely SBA is looking for P&L projections for 3 years, and they want to understand exactly. For the first year, they want to know month by month, how is this going to look? When will you be able to immediately afford the new payment? If not, how much ramp time do you need, that kind of thing. And an SBA expects the bank to find out, how'd you come up with these numbers? So are they just total gut numbers, or is it based on something? And hopefully your answer is it's based on something.
Yeah. So what I'm hearing is this is not a solution for like immediate cash where it would be like a line of credit or to get you out of a sticky cash situation. It's for intentional business growth.
Yeah, I would say in general, I should have qualified as well. There are line of credit programs with SBA,
Okay.
but even still, the requirements that must be met to begin drawing money on those programs, they are more time consuming just because it's more information than, like, it's not quick money. I think your point is correct. It's not quick money. It's intentional. It doesn't always have to be growth. It could be stability related. Sometimes it could be to restructure your balance sheet. You know, if someone did take quick money on not the greatest terms, has stabilized and is like, okay, hey, I'd rather have a 10-year term to repay that money on a fully amortizing note, that is possible as well. But you're right, it is not quick money.
Yeah. Yeah, that makes sense.
It's
Um,
patient money. It's patient. You'll have a longer repayment term, but you also need patience to get it.
yeah. Yeah. That makes sense, which is always a tough thing in the small business world when you realize you need money. It's typically I need it pretty quickly and not in 6 months from now. What qualifies them for the loan? Anything else? I know we talked about the 3 years of historical tax returns and financial statements. Anything else that they need to have on hand in order to qualify?
Not necessarily that they need to have on hand, but things that need to be true. There are a few things. One, the ability to repay, we already kind of covered that. And if it's not historical, you've got to have projections showing you'll be able to repay. That's the number one thing. The next thing is the business has to be sufficiently small. But that's a pretty broad definition by SBA. So if you have less than 5 million in EBITDA annually in all your businesses, you're going to qualify for the most part. So that you must be organized for profit. SBA is not for nonprofits. None of the principals of the business can have any sort of fraud history or any defaults to the government. So that could be student loans or as old um, home loans that are subsidized by the government, that kind of thing. Anything like that would disqualify you from consideration. So those aren't really things you can do so much as just you either are or are not qualified. Yeah, in all those areas.
Yeah. No, that makes sense. Any major risks that small businesses should be thinking about if they want to explore this option?
Yes, I think one of the one of the things about SBA lending is that it is in SBA is designed to incentivize banks to lend money to companies that otherwise couldn't get money on a conventional basis. And one of the biggest reasons why people can't get money is if their business is service oriented and they don't have collateral. And so because of the fact that many slash most SBA loans are under collateralized when you look at the business assets, SBA requires all owners with 20% or more ownership to sign a personal guarantee and pledge potentially personally held collateral, such as their primary residence if it has equity, potentially investment properties, things like that. So, a risk to SBA lending is that you are putting your name on the line in a way that's very specific. And so, it's certainly not something to do lightly.
Yeah. Yeah. No, I think that makes a ton of sense. I mean, a lot of our clients see that anytime they need to go and get debt or leverage debt, it's typically has to be financially secured by the personal guarantees. Um, I do have a specific question. A lot of our clients are, it's been a tough year. Most of them took out, or a lot of them took out the EIDL loan during post COVID times or COVID times. And, now we're looking, okay, we're experiencing some pretty significant financial hardship. What do we do? Like, this is a payment that we're making every month. Can we defer this payment? Where do I start? So if you're the business owner, well, like, what's the best starting place if you're experiencing that?
The first thing to do is don't freeze up. Try to reach SBA. And so the whatever documentation you have from SBA, use the contact information you've got. Try to reach people. Um, the way that the EIDL program came through during COVID is so different from how it's ever been used before. And so a lot of this is uncharted territory. So unfortunately, there's no tried and true sort of method. But the most important thing is that you do try to contact anyone whose contact information is available to you. Take their calls if they call, because there are deferral opportunities. I've seen borrowers negotiate for far lower payments, getting it down to an amount that you're still in repayment, but it's tiny, really small. The other thing is, if you're not having any luck with those avenues, if they're not reaching out to you and you can't get through to anyone, number one, I document all your efforts. Number two, if you go to your everyday bank and just say, do you have a contact at SBA? Even if they're not the ones that helped you get the EIDL loan, often there will be someone there who has had to deal with EIDL loans for one reason or another, and they can maybe get you in touch with a human to sort of figure out what your options are.
Yeah, I think that's really good advice that I've not thought about, where it's like, we just wanna talk to somebody, but it's like, you feel like you're putting requests into the abyss, and it's like, "Where is this going? What?"
Yeah, I can relate to that because it is sometimes like that. Because it's like they're building up departments of people to deal with something that just didn't exist before 2020. This kind of way.
Yeah, I mean, and just like with the yeah, I imagine there will be more information in the coming years to deal with.
I think so. As we do see some of the folks who are now starting to be in repayment, that just started. Most folks didn't have to start repaying until sometime earlier this year. It sounds like you're experiencing that. Your clients are like, "Oh gosh, this isn't great." um, yeah, so I'm sure we'll see more from them. Eventually, they'll have to, because there will be people who can't repay. So
Yeah, yeah. Okay. No, that yeah, thank you. I think that's really helpful. Um I guess in more general SBA loan terms, is there something they should not think about SBA loans? Like what are any other?
yeah. So an SBA loan, you already made one really good point, which is that when you need money quickly, SBA is not going to be. It's not a good solution. If for whatever reason you aren't willing to sign a personal guarantee, SBA is not going to make sense. If you don't have a specific plan and you're not prepared to do the work to create a specific plan, a business plan and projections to explain what you're going to do with the money, an SBA loan's going to be a really uphill battle, because those things are required. So, I'd say just don't bother if you aren't in a position to fill out that, to think through those things and have answers and documentation. And if your company can't afford it, that might seem obvious, but if you don't think your company can afford it when you learn what the monthly payment will be, then it doesn't really matter what the bank's assessment is. And banks will mostly get that right, no question. But sometimes banks don't quite get it right. You may know things that a bank doesn't think to ask about. Um, so don't take money if you don't know how you'll afford to repay it.
Yeah. Can you use like a lot of our clients are they're always wearing the M&A, like buy sell their business. If I'm a business owner and I am looking to acquire another business, can I apply for the SBA loan to use that and use those funds to buy a business?
Yes, that is one of the most popular ways that SBA money is used to acquire a business, either for first-time business owners or for, in this case, an agency that's looking to expand their book of business and maybe buy another regional player or something like that. Absolutely.
What size of a loan am I able to, if I'm a $5 million business with $1 million in EBITDA, like what kind of a loan am I looking, like ranges?
Well, the SBA 7A loan program is the ideal loan program for business acquisition like this, especially a service-based one. That loan program caps loans in an amount of 5 million.
Okay.
So up to 5 million. And is will work, and that's a loan amount. So if you're buying something really big, which you wouldn't be with the numbers you
Yeah.
just gave me, but if you're buying something really big, you could combine an SBA loan with some cash from yourself and that kind of thing.
Okay.
Um, but the amount you can borrow will be based on the cash flow of the business you're acquiring, not based on the cash flow of the business of your existing business.
Yeah.
They'll look at global cash flow to make sense of things, but it it's about what you'd be buying.
Yeah. Yeah. That makes sense. Um, yeah. Okay. I think that's a really intriguing option that I think like we'd have a subset of clients that would be interested in exploring that maybe haven't already started exploring.
Yeah, I think one of the things that people may not be aware of as well when they first start going down that road, if you start by asking your existing bank, like, what are my choices? Most conventional lenders, when you buy a business, will give maybe a 3, 5, or 7-year term with an amortization that's maybe 3, 5, or 7 years. If you're very lucky, maybe it'll be 10 years, but it's not fully amortizing, and so it's teeing you up for a not that far away day where you've gotta refinance or figure out what to do. And the cool thing about an SBA loan is that all of the term loans are fully amortizing, and they can be 10 years long for, a business that they could be even longer if there's real estate involved. You can potentially go out to 25 years if the loan you're asking for is at least 51% for the real estate where the business is operating. So I think that's an important consideration for business owners. Even sometimes when they qualify for conventional financing on those terms I mentioned, they may need to put down a 30% down payment as well, or 20% or something like that, where with SBA financing, you can have the longer term, and there are ways within the rules to actually acquire a business with no down payment, um, either through the equity that exists in your existing business and or through the accompaniment of SBA debt with a seller note or two.
Yeah, no, super interesting. Um, so I guess like if one of our clients in this situation, like what are their next step? Just contact their local whatever bank they're working with and start there.
Yeah, so yes, and I think it's important for people to realize there are over 2,000 banks in the country that are sort of approved and in the program and able to do SBA lending. And the rule book is like 800 pages. The credit guidelines are very gray on purpose, to give banks the ability to maneuver quite a bit. And so, yes, I would always start with your existing bank, just because they know you, they have your deposit accounts, and they may be the most inclined to give you good terms. However, if they're not, don't stop there. You could go to 10 SBA lenders who are all highly qualified and get 10 separate sort of responses on a loan request. And so don't be discouraged if the first lender you speak with says, no, thank you, or says yes, and these will be the terms. Don't be afraid to look around. And if you don't have success or you're not happy with what's possible with your existing lender, you can go online. The SBA website actually has a directory of lenders who participate in the program.
Okay.
You can always call Provide or Fifth Third. um, but yeah, I guess the key and most important thing is to recognize that the underwriting process is different everywhere. And so the risk assessment will be different. And that means you can get vastly different answers with
Yeah.
the same information.
Yeah. Yeah. That totally makes sense. Anything else you're seeing in the industry that you think would that's coming up in conversation that you think is beneficial to our clients to hear?
Well, I think now, one of the good things, I guess there's two things. One, with interest rates starting to come down, I'm assuming all of our clients are starting to breathe a little more easily in the variable interest rate environment. Um, but I think there's also a lot of M&A activity. And so it kind of touches on something you already asked about, but some people perceive this to be like the top of the market. And so sellers are trying to sell. I don't think it is the top of the market, but there's a lot of opportunity out there for buying. And so starting to look before you're ready to buy is a good way to sort of acclimate yourself to the marketplace and to what's possible and to what's hot, I guess, right now.
Yeah. If you're like, I'm a year to 6 months out from ready to buy something, that is the time that to start thinking about the SBA process, right?
I think so. I mean, people do it in a much more condensed time frame all the time, but I just think it's higher stress. If you consult with someone, a lender now, and say, "This is what I'm trying to do," or start looking at businesses, you can get your documents in order. You can get your sort of checklist of things you've got to do so that the process is just easier. It's more predictable and you can more easily fit it in while you're running your existing business. Cause that's the other challenge, right? A lot of times you have business owners who are trying to run their businesses in addition to trying to identify opportunities for growth, potentially through acquisition. So, um, you can always go to your banker closer to when you need the money, but I just think your life will be easier if you go earlier.
Awesome. Well, this was super helpful. I thought it was very interesting. I'm sure our clients will too. I really appreciate the time. Any final words you want to leave with the audience?
Um, I think just no, I think I said it before. The thing that I think is most important is dream big. Actually, I lied. There is one thing. Most people that I meet, business owners, they think they can only go for a loan for one thing at a time. And so they're surprised when they encounter questions, and when they come to me, for example, and I want to know, okay, well, you're asking about this piece of equipment, or you want to do an advertising campaign, and you want this amount of money, but tell me about the whole picture. Are you renting the space you operate in, and you would like to buy it, or you would like to know what's possible with buying it? Some people are really surprised to learn that you can get a loan that combines multiple pieces, multiple uses of proceeds. People are surprised to learn that they can afford to buy the building they're in and maybe even lower their monthly expense for the building, and be building equity in an asset. So I think my advice or my parting thought would be think big and always start with the big picture and the thinking big when you're talking to your banker, and let them be the ones to help you hone in on what's possible today versus what needs to be phase two.
Yeah, I like that. I also think that like we've in this world of digital life, we've lost the relationships with your banker, and so you only go to them in a high stress situation, or I often see clients only going to their bankers in a high stress situation, where what you're describing is like more relational, like, hey, like, let's look at the big picture, let's talk through this, like, what is possible, and having that relationship there is helpful.
You make a really good point, and I think there's a feeling among consumers in general. I mean, I feel this way. Everything is becoming so technology centric and focused, and some companies are doing that to the exclusion of humans. And maybe it's hard to get a human on the phone, but Provide, for example, we are very technology driven. Our whole application process is purely digital. But what do we do at the same time? We actually let the humans, that's me, talk to the business owners and think big and talk about things and free up the time to be removing obstacles and thinking through things in a more consultative fashion. And so the good bankers out there are making themselves more available the more technology exists because there's less administrative work for the person to do. So, um, I'd say, yeah, embrace that. Don't be afraid. If if you find the right partnership, your banker can really be an advocate for you with the bank to the credit committee, and so it's helpful. Those relationships are really valuable and worth every penny, I'd say.
Yeah. Yep. Yep, definitely agreed. Awesome. Well, I appreciate your time, and thanks for joining us today.
Thank you very much for having me. It's a pleasure.